And good morning, traders. It is July 17th, about 10 minutes before the market opens. It was a really tight range last night, overnight. We had about a 5-point range. It's been trading within that range here. Let's see, as we take a quick look at news and things that are going on here today, there's no U.S. planned federal news. That's at least those that are considered the movers. We've got, as we look also what's going on with bonds. Bonds are up a little bit overnight, as well as into the cash open. Crude has been dropping throughout the evening, bouncing back up, but still the general trend is down for crude overnight. Then we've got the E-minis, which is what we're going to be trading here this morning. Those have bounced back and forth throughout the evening. They are at about mid-range in the overall market move through the night. Let's see, it's Monday. We could have a little bit of chop here. Friday was incredibly bullish day throughout the day. In fact, if you look here on the left on my screen, so this is the market effectiveness chart. You can see on Friday what the overall effort was to move price up. Now, this is not a price chart, but what it does is it shows a combination of a collection of elements that comprise the market engine. So there's a collection of things that go into this, but the net effect is it continued to push up. So the news on that would be, or the effect of that would be, that you would then buy all of the pullbacks. And there are several pullbacks. These along the bottom here, these are where some shifts in the market came. Every time that red line came down and touched, that was your opportunity. Let's go take a look at price, see what price looked like on that day. I'm gonna increase this here a little bit. All right, let's take a look at Friday. Here was last Friday. Here's how I traded it. I've got the VWAP lines here on my price chart. Okay, so here's last Friday. We're coming in to the open. We just sort of do a quick review here, what that looked like. So here at the open, bounced back and forth a couple times. You'll notice that here on this green line, this is called the market engine indicator. It never does get to the bottom. And so the way you trade that is you continue to trade the breaks as it comes back up. But the one that I wanted to point out, the trade that was the real tell throughout the day, was this one right here. Watch closely on this. Okay, so what we've got here is, if you look at both charts, you see what's going on. You see how price here on the right side just went flat. You can see the market engine indicator here on the bottom. This is the green line. It pulls back. And then it starts to break up. What's happening as this goes flat across here, when you look to the left on the market effectiveness chart, you can see under the hood, you can see everything's pushing up. That is a huge tell that it's gonna high probability to pop to the upside when it keeps pushing up and up on the left-hand chart there, but price is sitting flat. There's a lot of pressure pushing this up. And so there are several things that said this was a great opportunity. One was the big gear shift that took place. The other was the price, or not the price, excuse me, the market effectiveness chart that was popping up, pushing all the way up here. We got the pullback here on the market engine indicator, and then you just create that trend line right across there and it pops up. Obviously the trade was to the upside, and it continued to the upside throughout the whole day. Just continued to push up all day long on that. Okay. All right, let me get this cleaned up here. All right, so the market's going to open here in 5 minutes. Monday morning could be a little choppy. Yeah, so a great day on Friday. Awesome day. Market got a little extended there at the end. Let's take a look at some of the value areas here. So last Friday, take a look here. This is a 15-minute on the E-mini. Got the both market engines up here for the NASDAQ and for the NYSE. So here's Wednesday, Thursday, Friday. It's pushing up across two whole value areas when we look at the market profile. Then pushed all the way up here to the top, got to the very end, and it's come back, rested pretty close to being right here in the center for the value area. So that was the big push over the previous 3 days. Okay. All right, let's get ready here for this open. Hope y'all had a good weekend. Let's get set back up here. Okay. So on my chart here, so I've got a couple things going on the chart that I trade on. So there's two charts that I trade on. The first one is, I just got the 1 minute chart. And I have the market engine indicator here on the bottom. Now it only shows up when the market opens. So it's an indicator that, this is an indicator that I developed. Tell me to see what the effort is that's going in to moving the price. Over here on the left, then I have the market effectiveness chart. This combines a collection of internals that shows me the net effect of the NYSE exchange activities. And as these two get misaligned, that's when this red line comes down, and that's an opportunity to look for a trade. Okay. And then we've got here on the right hand side the 1 minute chart. I have the VWAPs up. So I have the VWAP, which is red, then the 1, 2, and 3 standard deviation VWAPs on there as well. Those are creating frames of reference for me. I have a blue line across here. Blue line's telling me what the overnight range was. That's the top. Here's the bottom. Orient your eyes with that. And then there will be just a couple other lines here. This white line is the settle or the close from last Friday. So I like to see what the previous settle was. And as soon as the market opens here in about 2 minutes, we will also see another line show up. It'll be like a pink line. It's going to show us the open. So you can see we're not too far from the settle. So it just bounced around the settle overnight. We're a little below the settle, but not a strong conviction in terms of the open. Okay. All right. Yeah, tight range overnight. All right. Let's see, looking ahead into the week, things that are coming up, other news events. No major news events, at least for the U.S. on the 18th, talking about federal economic reports. But on the 19th this week, we've got building permits, we've got crude oil inventories. That's coming up. Those are pre-market reports. On the Thursday, on the 20th, we've got unemployment claims. And then Friday, no news. So relatively small amount of news and reports coming out this week. Okay. Now, so I've got several of these effectiveness charts. So this one in particular is focused on what's happening on the NYSE exchange. But then there are those activities that are taking place on the NASDAQ and for the Russell. and then you can combine those and get the overall net effect. And it's important to know when you are trading some instrument how what you're trading is performing relative to that. All right, market just opened. We have our open at 2455.75. It's our open, 2455.75. Let's see what we've got here by way of charts. Okay. Feels like it wants to roll over. We'll see if it happens. Fairly neutral open here compared to the overnight, compared to the settlement. All right, now some key patterns to follow and watch is on the market engine indicator. So the market engine indicator gives us a view of current activities that are taking place in terms of buying pressure, number of activities that are going on, and what you're really looking for is for it to show you the pattern of, is it going to stay to one side, meaning to the top side or to the bottom, or is it going to cross back and forth? And once you confirm that it's crossed back and forth, that's awesome trading opportunity. Okay, a little bit of indecision here at the open. Looking here at the left, we've got the net effect is slightly positive, not much, nothing like Friday. I mean, you look at the pressures on last Friday. Here it's somewhat sort of mixed here at the beginning. A little bit of lackluster here. Slight push down. See if it can sustain the roll. Roll over just a bit. Okay, I just took a quick hit there on that. Took my first trade there. Okay. Bonds are continuing to push up slightly. Crude is settled out. Let's see if, but overall it's down from the overnight. All right, the effectiveness chart on the Russell is negative. It's pulled down. It often is a leader. It doesn't mean everyone follows. The real tell is, what's the NASDAQ effectiveness chart going to do? It's starting to roll down a bit as well, the NASDAQ. I'm not showing it. You can't see it on my screen or on the screen that I'm sharing. I'm watching it on another monitor. Same with the Russell. Okay, so we have some pressure that it's pushing down a little bit. Many times on the initial open too, you can get these trades where the effectiveness charts are continuing to push one direction, but price goes another direction, like right now. So you can't, I know you can't see all of them, but what happens here is you got price pushing up a little bit right here, but as I watch the market effectiveness charts on both the NYSE, which is right here, which you can see, as well as on the NASDAQ, which you can't, and the Russell. NASDAQ and Russell are continuing to push down. price is shooting up here just a little bit. Okay. All right, so what I do in those kinds of situations when I see that happening is that starts to become a little bit of a weak push up. So at times I'll sell into that. Okay. All right, so push back up, back to the open. Just below the open at the moment. Meanwhile, market effectiveness chart here on the left is slightly down, even though price was pushing up. NASDAQ started to come up a little bit. The Russell effectiveness chart is dropping quite rapidly. Right, so I sold into that. So I just bought some back. And let's see. Still have some open position. NASDAQ continuing to drop. I'm not watching the NASDAQ price chart. Rather, what I'm watching is the market effectiveness chart, which basically says how effective is the engine on the NASDAQ at moving price or pushing price a certain direction. How effective is it at doing that? Okay, so I've closed the position there. So I've had 2 trades so far. Those are both positive. NASDAQ's starting to continue down. Russell effectiveness chart is stabling out. That price is pushing up, and now, okay, so this is important. You see it's right here when the effectiveness chart then also says, all right, I'm now being effective at pushing the price up. So you see the difference earlier. While prices are going up, these are still pushing down. So that gave for a great opportunity to go short. So I took them short at that moment. Those are quick scalps, no doubt about it. Okay, I'm watching some similar charts on the NASDAQ and the NYSE. All right, let's see where we are overall. We've come down here on the market engine indicator. It's been pushing down slightly. Small pull up right here, nothing big. In terms of the market engine indicator, which is talking about the immediate pressure, okay, the immediate set of efforts that are taking place to move price, whereas that's just one element of the overall market engine, whereas the broader market engine is a combination of many factors, which is what this is right here. All right, so you see it's starting to roll and push the other direction. So it's starting to say, yep, I'm lining up. Now, when you have the red line here across the top, what it's basically showing you is that the engine underneath as well as price are aligned. So this is moving up as well as price is moving up, it's aligned, okay? Misalignment comes then when this, I call it the gear shift, when that comes down and separates. That, of course, happened right at the end of Friday, so that's not today's signal at all. All right, we're just sitting just a little bit above the open, bouncing around on the open at the moment. The overall trend is down. We have a slight pullback at the moment. Meanwhile, looking back over to the NASDAQ effectiveness chart, its engine has turned bearish. The Russell is still pushing up though. So now we have some dissonance between the different markets. That happens. All right. Okay, we've got crude pushing back up high. Quick push up on crude. Bonds started to roll over a little bit. Crude going higher and higher. Big push on crude. Up it goes. See if the markets will follow. There goes price. Price is still going up. Okay, and then we've got the settle here at 57.5. 57.5, yeah, that's a settle from Friday. Okay, NASDAQ engine still pushing down. So even though crude's pushing up, NASDAQ engine pushing down, crude's pushing up. We've got the NYSE engine, looks like trying to go a little bit bearish. Let's see. For sure the NASDAQ effectiveness chart is going down. Let's see if there's follow through from the other markets on this. Russell has started to come back off. All right, we're going to look for trade opportunity. Now, the best trade opportunities is when it's out at the extremes right here. Oh, okay, big push down, and that just filled me. All right. All right, big drop down, big push down. All right, so I've continued to go with the push down. Give us another push past that. Okay, yeah, NASDAQ engine still continuing. Russell's now pushing down. Obviously, the NYSE's pushing down. Opportunity still to the short side. All right, so I got a nice fill on that one. Look how fast those stops cleared. That was quick. You know, when you see that, you realize there was a whole bunch of stops that were sitting right at that area, and those stops just came in and got cleared out really quick. That's a good portion of the market movement is due to that kind of order executing. You got a whole bunch of stops sitting along there, and boy, price just moves quickly as it clears out those stops. That was fast. Like I barely took my eye off the chart. Okay, we've got all three are starting to show some slight pullback on that, coming back up. All right. Good old choppy morning there. Lots of different signals, different directions, isn't it? And the key here too is that here on the market engine indicator, when it sits like that, right, there's no real good strong indication of the direction. So it's just a few scalp trades that I've taken off this morning when I had confidence due to the several engines lining up and saying, okay, here's an opportunity for some quick. I don't prefer to trade that way. I'd rather have some more work out here at the edges. It's at the edges on this indicator where the best trading opportunities are. All right, we've got some effort for looking up here. You can see that price is pushing up. The NASDAQ effectiveness chart, which you can't see, is pushing up. Same with the Russell. NYSE is hovering here, sort of waiting. Bonds are up. Crude's up. the overall net effect of the combination of the markets are down slightly, not much. Massive push up, just a massive push up right there. Okay, so we got really a lot of effort pushing into that. Okay, that's where you know some good strong impulsive buyers came in there. Okay, so what I did on that was I actually, that pushed so quick and so fast here that I actually took a couple trades just on the bounce. So that was more of a responsive move there. We've got crude pushing up. The overall effectiveness charts are pushing up. We've also got NASDAQ up, Russell up. The NYSE is pushing up as well. Okay, so what I did there was there was some good responsive trade opportunity that happened there. Not my favorite kind of trade though. My favorite is when we've got the three engines that are lined up and then you've got some extension out here on the market engine indicator. High probabilities on those, so that's when you can put in and hold it for a period of time. Okay, so I've taken about 6 trades now. They've all been profitable at this point. I'm now flat. Flat. Okay, I am flat. All right. We've got 3 that are pushing up, a little bit of a pullback on, I've gone long. Now it's sitting above the settlement from last night. So the trade opportunity here is the momentum, and this is not a momentum indicator, but momentum is clearly pushing to the upside, and we have 3 market engines that are confirming, that are pushing up. Crude pushed up, and now it's pulled back a little. We've also got bonds slowly dropping or pulling off a little bit as well. All right, so we're up near the top here. We're up at the top of the market engine indicator. Okay. Okay, it's hovering near the settlement, a little bit below it at this moment. Okay, we have all 3 effectiveness charts that have settled off from that push. And I have one more position open. I'm long at the moment. Looking for one more push. And I'm sitting, my target is that second VWAP right there, right here. I will use those many times as targets. I tend to trade by looking for high probability, not only entries but locations to go towards. Okay, and we got a little bit of a pullback here. So I've closed all my positions except one, hoping to get a higher push here. Crude is sitting steady. Bonds pulled off, but now they're sitting steady. I may not get that last, I may have to pull my target in. Okay, and we've got a big gear shift coming in right here. Really big gear shift. See that? That's where, so what that means is that we've got price is pushing one direction. So right now price is really pushing down, but the market effectiveness chart is really pushing up. So the two are misaligned. All right, now in most cases they snap back together by aligning with the market effectiveness chart. Okay, so that's in most cases, which means I have a long position, so that's good for the position that I'm in. So big gear shift there. As I look over at the NASDAQ, it is also starting to form gear shift as well. But what it mainly says is, hey, prepare for a shift in direction. All right, especially on a day like this where it's quite a bit choppy. On a day where it's continually bullish or continually bearish, then it's typically well, continuation, right? It gives you an opportunity to get back in. All right, so we've got price pushing up, and we've got I'll pull in my target, pull my target in here a bit. Okay, all right. I just filled there. Just filled on that one. Okay, so I got a couple things going on here. First of all, we've got the market engine indicators near the top. Second, we've got a gear shift coming, which tell me potential change. Now, the change could be that it continues to push further, but I trade cautiously, so I trade where I take the profit without trying to overpush it. Here we go. Looks like it might roll back on us. We now have the NASDAQ engine is starting to roll back down. We've got crude is starting to roll back down. The NYSE is slightly pushing up, though. You can see its effectiveness chart. A little choppy time right here as it sits just below the settle. All right. I have too many pieces starting to pull against it, so I prefer the higher probability, so that's why I pulled my target in and just took a smaller profit on it. I had one of my mentors one time say to me, no one ever went broke taking a profit. So that's what I did. So it may push up here now, and I'd have gotten the better fill, but I'm good with that. Crude is really dropping at the moment. Waiting for this gear shift to occur. Russell's effectiveness chart is really pushing up quickly, moving up. Whereas the NASDAQ is pushing down, and the NYSE's up. So when there's that kind of misalignment, it can, you know, where it tends to be the best is when both the NYSE, if I can say that, and the NASDAQ engines are aligned. Then we tend to really get good solid direction for a period of time. But when they're misaligned, as they are at the moment, then you tend to get this sort of behavior, which is that it's chopping around. And it's even best if all three, if you got Russell and NASDAQ and IC are all pushing, and they're all being effective at pushing price in the same direction, then you know you got some confluence there that's really making a difference. On another chart, I'm looking at the channel, and right now we're in the middle of the channel. We're in the middle of the channel from the overnight session, so it's blah right now, right? It's not that overly exciting here. Okay, and again, this this yellow. Let's see, that's blue. This blue line at the top was the overnight high. All right, now we've got the Russell's pushing up, the NASDAQ's pushing up, but now the IC is pulling back in terms of effectiveness chart. All right, it's the moment of chop. 5 more minutes till we're at the top of the hour. Bonds still pushing up a bit. The tone has changed. Things have moved in general to the upside on the composite. So if you take the composite of all of the engines, the tone has changed to up, to bullish, not large, not a strong bullish, but meanwhile crude is pulling off, continuing to drop. Bonds are up a little and continue to stay up. They have dropped off. Okay. Trying to come out of this gear shift. So what this means, the gear shift means is that when the red line is near the top here, it means that the efforts going on under the hood are aligned with what's going on with price. Okay. So small gear shift taking place right here. Typically you want to look at what's happening right before that, and it's been going up. Let's see if it turns into a continuation or if it turns into a reversal. All right. Russell is up in terms of its effectiveness chart. NASDAQ is starting to pull off, and really looking for overextension opportunities. Those are the best, right? The overextension. I want to point out something here on the market engine indicator. This is a divergence opportunity. So when you've got this going on here, you got price, it's coming down like that, but then right here you've got this divergence here where the market engine indicator is pushing up. So that's one of the things that gave me some confidence to jump in on that trade quickly. Okay, lots of indecision. Need the market to make a decision. Okay, the overall effectiveness of all the three markets, you can't see it. I have it on another chart. Is to the upside. Not strong, but it is to the upside. But crude has pulled off. Bonds have continued to edge up a little bit. Okay. 30 more seconds till the top of the hour. It's got a subtle, slight push to the upside. We might get another push here to the upside. Russell effectiveness chart is dropping, which means being more effective at pushing price down. NASDAQ is down slightly but mixed, and NYSE is down just a little bit. Market engine indicator dropping pretty quick here, pulling down. Okay, all three of them are lined up now in terms of pulling back. They're all starting to drop and come down, meaning the Russell, the NASDAQ, and the NYSE. Crude has dropped a lot. Crude itself has taken a big drop down. Crude's dropping really fast. We've got the Russell, the NASDAQ, right at the top of the hour. The Russell, the NASDAQ, and the NYSE effectiveness charts are going down. I'm short at the moment. A quick push and pull back. Crude's continuing to hold its position down. This may be a classic head fake. Let's see. All right, comes back down into my favor. We've got the let's see, the Russell, both the NASDAQ. Now NYSE's starting to pull back up. On the effectiveness chart, you can see the NYSE effectiveness chart. It's being a little more effective pushing price up than down. There was a good drop off of there. Got a pullback coming up here. Okay, let's see. We have a top of the range here. So we've got a channel here that's at 2458, 2459. That's the top of the channel right there. Overnight, 2458.84. Obviously, 2459. So there's an opportunity for playing that side. We've got crude is still pushing down. Bonds are still up. And the overall composite is slightly to the upside. Slightly to the upside. All right, NYSE is pushing up, crude's pushing up. We're all starting to see some push to the upside. And the effectiveness charts, that is. Okay, starting to pull up here. Bonds are dropping. Crude's dropping again. Now, you got a little bit of a divergence going on here. So you've got the market engine indicator up here, and price was here, but now you got the market engine indicator down here, but price is up here. Very small divergence. Meanwhile, the gear shift has taken place, and it appears to be a continuation gear shift. So came down, separated, thought did a double shift and started to push up. NASDAQ is pushing up. Russell is up. We've got slightly up, although right now it's a bit bearish. And the NYSE. All right. It's going to keep creeping up, it looks like. It's 9 o'clock, 9:05 Chicago time. Once come touch the top of this channel, I'm going to test up here at some highs here. So we're looking at it's not a super well formed market on Friday in the sense of the profile. I don't trade off of that, but it's a nice reference model to refer to. Kind of see where you are in terms of the overall structure. So it's going to go up and it's going to test this. What I'm going to do is I'm going to curate my trade here. See, we're super high, and we come up here to the top of the market engine indicator. Now, if the market engine indicator has touched both sides, then you have more confidence that you can trade that as a reversal right there. But since it's not touched both sides, then that's not a good trade. I would strongly encourage you not to do that. So here we have a lot of alignment. We've got Russell pushing up. We've got NASDAQ engine pushing up, although it just pulled off a little bit. We've got the NYSE market effectiveness chart pushing up. We're at the top of the overnight, or coming really close to it. Okay, so I'm going to curate my trade, which means I'm going to I took the bait when it went down, and so what I'm going to do is I'm going to correct this, and the way to correct it is to use leverage at the right point in time, right? So the right point in time is when it's hit, of course, key reference parts. So there's a couple of things to help you in this kind of situation. So first of all, we got to find when it's going to come into a location where there's certainly enough resistance, as well as when you've got high probability of it turning around. So higher probabilities are when it's at the extremes here. The better The better situation, as I'd mentioned, is if it's down at the bottom. What I'm going to do is I'm going to wait for it to come back up into this area again on the market engine indicator, and then that'll be my opportunity when it comes back up in there again, that I'll use some leverage to get me out. Now the NYSE just did, excuse me, the NASDAQ just, market engine just really rolled over hard down. So if I can do without using other leverage, then I'm happy about that. NASDAQ pushing down hard, Russell pushing down hard. The NYSE effectiveness is still to the upside though, even though the other two are pushing down. You saw that big push down on price. It really dropped hard there for a moment. Let's see if all three line up. This is mostly short-term traders with stops moving the market. I don't get the sense of any sort of big sellers or buyers in here at the moment. All right. Yep, so it's going to be plan B. Okay, so I'll use leverage at the right time. By leverage, I mean I'll put in other contracts. I don't have much on, so I'll put in other contracts at the right time to clear out my position. But you got to use some practice and skill to do it that way. So lots of people use a lot of stops. Professional traders that I've worked with will seen two strategies. Ones will take high probability profits and move out, which is typically what I do. Then others will use leverage at the right time to get them out of certain situations. So that's what I'm going to do here. You see down here in the market engine indicator right here, this line that I drew. So that'll be another opportunity to, so it'll be 2 points that I could scale in, turn around. One, if it really overextends and comes back up again, that'll be the opportunity. Or number two, if it breaks down past this line right here, showing downward thrust. Showing some real strength here to the upside on the market effectiveness chart on the NYSE, which you can see right here. And NASDAQ, however, chopping around. It is up at the moment. Russell's back down. So we got a bunch of really misaligned chop going on here this morning. Make profit on it, but yeah, you got to be careful. Let's see if it's going to actually break down here for us and come below. We're back to the settle from overnight, not from Friday, I mean. Friday's settle, bounced off of it. Russell pushing down hard. NASDAQ pushing down as well. NYSE continuing to show strength to the upside. Hence the kind of morning that we have, chopping and bouncing around. It's almost an hour, no, it's almost 45 minutes into the opening session, morning session, 9:15 Chicago time almost. Okay, so we've got this starting to form, the market engine indicator starting to form, but You want to wait until that actually finishes, right, and completes the bar, which is why I didn't do anything at that moment. Might come back up here and give us another high touch. We'll see. Takes a little more precision to do it that way, but much more about taking a profit than booking the losses. So there's two key things, right? Pick the direction based on what the engines are doing, and then when there is, and you do that with, you know, small number of contracts, then you can always correct that if it's wrong. Just wait for this to pull back into here. Bounced off of the settlement from Friday, pushed back up. We got the NASDAQ engine is pushing down, as well as the Russell is starting to push down. But in pure defiance, the NYSE is being held up. NYSE is continuing to hold up. The moment all three come into alignment, there's your opportunity. It's called confluence. Yep, called confluence. Although, you know, sometimes confluence isn't it either. Sometimes you'll have the NYSE continues to go, you know, one direction. So you keep your eye on the NASDAQ one, because the NASDAQ one will often influence the very near-term sort of actions or behaviors. So you want to watch both. And I'm not talking about price, I'm talking about these market effectiveness charts, okay? So here's the NASDAQ one. Probably hard to see. You can see quite the difference, right? NASDAQ one chopping along, not showing the strength that the NYSE one is. The NYSE one over here is just up, 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 up. NASDAQ, though, is trying to push another direction. The moment they get aligned, though, you can see this is starting to show some pressure up. And what do you see price doing right here? Pushing up, right? So you're going to trade these, you got to keep an eye on these correlated markets, understand what they're doing. So that's what's propping this up at the moment. It's what's keeping us in this area, is that the NYSE engine, which means there's a lot of buying on the stocks on the NYSE exchange that are continuing on the uptick to keep price moving forward. But this right here is not a tick chart. It does take into consideration certainly some things going on with tick, but just as in your car's engine, it's not just about the gas. You need gas, obviously, but it's also about other factors too, like how big is the hill you're coming up to, and what's the air intake like, and is there a lot of wind outside pushing on the car. So this chart here is a much broader view across a collection of those items. Okay, so we're starting to see a first sort of roll here. We can see there's a big long gear shift been taking place here. And when this red line comes up to the top, it means that the engine and price are aligned. Now you'll see it's starting to maybe tease at us here that it could roll over, because it's starting to do a bearish, and these two are starting to come into alignment. Meanwhile, over here on the engine indicator, market engine indicator, sitting right along this line, and if it were to roll and push down, that would give us another indication. We would also, though, want to have the NASDAQ and the Russell also to pull over. At the moment, now those are that's too funny. Those are actually being more bullish at the moment on their effectiveness charts. These kinds of mornings, you know, you're waiting for the markets to get aligned. Okay. Acts like it wants to roll over. Let's see if it does. There's a really strong alignment there trying to show up here. NASDAQ starting to show that it's pushing over 2, as well as a nice effectiveness chart is showing that as well. We want to see some follow through, obviously, on this. I have a friend who used to say break, hook, and go, right? It was the infamous break, hook, and go. We'll see, though. Russell pushing up, NASDAQ turned back around, going down. But look at that nicey climb. Look at that nicey climb. And look at the misalignment, too. There's a misalignment. The nicey engine just pushing up, up, up. Now there's some buyers who do not want this to go back down. Meanwhile, NASDAQ is doing just the opposite with just as much intensity. Producing the chop, the misalignment. See which way this is gonna go. The Russell also jumped up. Like the calm before the storm, right? It collects a lot of sellers and buyers when it does this, right? People settling in on their positions, building up positions, being confident that it's going to go a certain direction. The overall composite across all of these engines is still to the upside. Still to the upside. Albeit choppy, painful sort of move, it's still to the upside. Not with a lot of conviction, but it is rolling to the upside. Let me give you a peek on that. So I use a few charts to help me see what is the net effect of all of the effort pushing on the market. You see across the NYSE, the NASDAQ, and the Russell, the combination of all of those engines working together sort of pulled off at the beginning of the open and then just been sliding slowly up. Just a grind. The old cash grind. It's even not a cash grind, it's sort of a volatile cash grind, right? Okay. Just needed to make a decision one way or the other because that will tell me which way to trade. Even though I'm still sitting on a short position, the moment it tips its hand, that tells me what I'll do. If it pushes super hard to the upside, I know how I'll recover. If it pushes hard to the downside, well, yeah, I'll just close my position. Got to be able to know how to handle both situations. Because calling every single shot correctly, no. Got my first 6 right, my 7th one, nope. Not my 7th one. So this is my 7th position of the day. Still positive for the day. But I want to close this one positive. Got to pull off here on the NYSE engine. Tell you, these are just totally misaligned. So NYSE pushes up, NASDAQ goes down. NASDAQ pushes up, NYSE goes down. So now NASDAQ's pushing up, Russell's pushing up, but now NYSE's pulling back. So interesting that NASDAQ's up, and what's this? Price is up. That's an interesting view. See that? That's something to take note of. When you see that happening, you go, okay, you can see that lots of times some of the short-term movements will follow that NASDAQ. NASDAQ still pushing up. NYSE back a little bit, but not much. Russell's pushing up. Here comes the big push. Here we go. Came up, touched the top. Touch the top. All right, good. All right, we're getting alignment to the upside. That's what I want to see. We're going to pound that thing back in. So what's going to happen is it's going to break out of a channel here. That's what we want. And it'll give an opportunity to recover. So we want it to show some aggressive moves here. Either that or fall over and be done with it. So either way. Okay. Let's take the aggressive moves to the top. I'm prepared for that. So what I've done is I've identified positions or locations where then I'll actually scale. You gotta be quick and on the ball with this kind of trade. I'm still positive for the day. Okay. All right, nice. This is what we want. Okay, you want to see that pushing up, getting to the edge. We want to see price really push up high and hard as well. We want to see some signs of exhaustion. Russell engine pushing up high, NYSE's pushing up, but NASDAQ is dropping down, and so is price at the moment. What a fun, choppy morning, huh? It's like riding the waves. All right. Bonds are dropping off. That'll put some strength in the in the sails of the, I should not use that metaphor. That's a boating metaphor, and I'd use the word sails. All right. NASDAQ pushing down hard, Russell pushing down hard on the effectiveness chart, so it means they're being effective, pushing price down to the bottom. We came up and touched the very top here on the engine indicator. Price dropped. Got NASDAQ continuing to push down. Now the NYSE is also, might have some alignment here. Take a short here. I'm still in my 7th position. Not convinced yet. I'll have more conviction when it breaks out of that channel. Channels are key. I know the channel. Now, you're wondering what I mean by channel. So, I have a chart that shows the market structure in terms of the channels. And the key is to look at the market from, obviously from a timing perspective, but also from a structure perspective, where you take time out of being a first-class citizen, right? Because see, all these charts, they show time as a first-class citizen, but really, you should also have a chart that says, oh, let me just look at the structure itself, right? Which is the movement of price and the structure that it's gone through, and time is secondary. It's only big. So I use range chart for that. When you do that, you're able to see just the pure, price movement, and then, time is secondary, right? And on that chart, on that range chart, then I can see a pretty decent channel that we're actually sitting at the top of, that was formed right at, it was formed over the weekend. And so it's been playing along the top of it for the last, what, 20-30 minutes. We've got NASDAQ pushing down on its effectiveness chart. NYSE's trying to decide. Russell came down, was trying to decide. Keeps coming down and flirting with this settlement area from Friday. That's what this white line is. All right, here we go. I was yakking and all right, so the market engine indicator came down, pushed below here. That's what we want. We want just a little bit more follow through. This orange line is just the 89 EMA. It's pretty close to a 50 moving average. I use the EMAs, 89 EMA. Comes down here and retests right there. Rolling back. Let's see, Russell's pushing up on its engine indicator, NASDAQ also. NYSE's trying to roll over though. Be nice to get all three of them, at least two of them, get at least NASDAQ and the NYSE aligned, then that's when good scale-in opportunities come. Get those two aligned. So here we are, back to the settlement from Friday, sitting on the settlement. Those are key things to track. Track the opens, track the previous settlement, track the overnight highs and lows. Got to know those. Know where the basic channel of movement's been, and then know where everyone's trading at the moment within that structure. And there you have it. You try to keep it as simple as possible. I have a few lines on here though, confuses some people. The dashed lines are the VWAPs. I'm a fan of those. And then I have several moving averages, so that helps my eye to sort of visualize the strength of it. Obviously the wider they get apart, you know, the stronger it is. So this is starting to look like it could roll. Hopefully it does. That'll come into my favor. Or not. Still committed to clearing out that one. Got a couple ways to do it here. It's Monday, July 17th. Took 6 trade opportunities here through the open, using the combination of the market engine indicator as well as the market effectiveness chart. And then on my 7th trade, of course, still very much net positive for the morning, but I got one position left open that's short that I'm looking to close. Here comes the Russell's pushing down, the NASDAQ's pushing down. And the NYSE is trying to roll over. Let's see if it does. Timing matters, doesn't it? It's about good timing. You notice the market engine indicator sort of stuck in this little channel right here. You see that? So you notice I drew a couple of these. One was to the first, which gave that divergence signal. So you realize, okay, that's going to be an important one to track moving forward. And then this next one was to one of the second or third, sorry, turning points that hit a key reference part on the indicator itself. And so now it's been sort of chopping in and around that. So it's 9:35 Chicago time. Waiting for a bit of a short activity to take place here, for it to come short, so that we can clear out a position here. Rolling over here, we got the NASDAQ pushing down, the Russell is pushing down in terms of the market effectiveness chart. Meanwhile, the market effectiveness chart on the NYSE pushed up hard and then is pulled back. We've got a gear shift taking place. So the gear shift here is starting to give the indication that, okay, things could turn another direction. So it's either going to be heads up, it'll be continuation, or heads up, it's going to roll over, go another direction here. So let's see what it does. We are at 9:36 Chicago time. I've actually scaled in with this. All right, so I'm getting touched here, and I just closed that position. I still have one more open. I'm taking it down. I'm still open with one. So my 7th trade was successful. I added an 8th trade. Okay. All right, that was successful. All right, so 8 trades successful here. Had to wait on number 7. A little painful, but I'm flat at the moment. We've got really big alignment here all the way up here on the NASDAQ, the Russell, and a bit here on the NYSE. Probably roll back up here, and I'll take an opportunity to sell something back to the market when it rolls back up in here a little bit. And that's of course just a quick scalp opportunity is all that is, right? It's taking advantage of the fact that it overextended, went too far. NASDAQ continuing pushing down, same with Russell. All right, so I'm just gonna take something right there, sell something, and Russell, okay, let's look here. We've got NASDAQ still down, pushing up a little. NYSE has recovered and pushed back up. So I scaled in on that big push down and took a bit out, so that was number 7 and 8 on the trades this morning. I'm using a combination of the market effectiveness chart, which is this chart right here, which is not price, but rather it's an aggregation of multiple internal factors that shows the net effect on the NYSE exchange. It's sliding to the upside, continuing to push to the upside. Meanwhile, I'm doing a similar thing on the NASDAQ right here. You'll notice that, however, it is rolling down to the downside, and lots of times when you get this sort of misalignment, right, it creates this, right, this sort of chop. Lots of times you can get some of your real near-term, short-term trades off of the NASDAQ engine when it's behaving like that. So we've got the Russell engine as well over here, and it's also more bullish, which adds to the impedance mismatch. That sounds just like a big word I could use today. So crude's pushing up here, and I took a quick scalp off of that big push when it came down. Actually, I was already short when it came down. I was waiting for it to roll, and it did. So as it rolled, I scaled in, took some more off, and then I also took advantage of the big push. Of the big push down. Okay. All right. Well, that's going to be my trading here this morning. 8 trades went successfully. Number 7 made me wait. How dare that? All right. Thank you for joining, and hopefully this is instructional. If you like it, leave me a message on my, or if you don't like it, leave me a message on my YouTube channel. I look forward to collaborating with you. All right. Trade.